Ladies and gentlemen, we have a very exciting video today because we're going to be talking about this AI stock that has had a short interest percentage that has been quietly but also highly increasing throughout the year. And right now it sits at one of the highest shorted stocks compared to all the other stocks in the US stock market, not just AI stocks. And talking about that, the potential for a short squeeze starts to become in question, especially with the days to cover that is continuing to increase. We're going to be analyzing this. I'll be sharing some information that came across my table that I thought was important for you guys to know. So if you're new to the channel or a returning viewer, hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. I'm just collecting all the data and dispatching it to you. Now, what we see, and talking about the stock, it is C3.ai. This has been a very trendy stock throughout the year of 2023, and it's up over 100%, nearly at about 170% year to date. That might have some small fluctuations in the last few trading sessions of the year here, but nonetheless, C3.ai is a large SaaS company, software as a service. And what they do is sell these softwares that allow companies to roll out large AI data applications to help either, with productivity, to help with efficiency, cost savings, anything you want to do with their AI data applications to help benefit these clients' businesses. And they are a subscription-based model and have actually just changed to more of a consumption base as you pay more as you go. But with that being said, what you see with these SaaS companies is a lot of other competitors that are coming into the industry as people are all trying to get their hands and trying to get involved into this AI boom that we have seen throughout the year. And where C3.ai sits in terms of the stock is at an interesting point, because right now it's going to have to face competition coming into next year, and we have seen that already in terms of the actual earnings and with the actual future guidance that C3.ai has reported in terms of their growth metrics. Now, talking about this and talking about C3.ai is that this stock, like I said, has surged more than 166%. And what we've seen is a lot of popularity within the applications of the software and basically how they serve these clients. One thing to know though, in terms of C3.ai, is that its ticker symbol is AI. So anybody that's really interested in AI, looking to get into different stocks, this basically automatically becomes on their watch list, gets on the radar, and people can possibly just take an investment into it just because of its ticker symbol, not really knowing what the company is all about. Now, talking about that, what we have seen in terms of the short interest ratio is that the percentage of C3.ai's float shorted was 9.2% on the 1st of January 23. So, and it increased to 38.2% by December of 11th. So talking about that, this increase in short interest often signals, and what we see from a retail, from an institutional perspective, is that more people are becoming bearish on the stock. And what we see is C3, like I said before, .ai currently has one of the highest short interest among stocks trading on the US stock market. So for all the shares of the float right now, 38.2% are being shorted. And while this short interest, like I said, is notably high, any unforeseen positive news, not bearish news, what a lot of investors are predicting, if we see any positive catalyst, any major media articles being posted that do have a lot of bullish perspective behind them and momentum and emotion, this could potentially initiate a short squeeze. And the reason why is because the days to cover is continuing to increase. As of basically December 11th, the days to cover ratio stood at 3.56. But if we go here at shortsqueeze.com, looking at the current days to cover right now is at 4.5. What this really means, if you don't know a lot about basically days to cover and a short squeeze and how this kind of exploded from the whole GameStop and AMC meme stock movements, is that if all of these shorts wanted to cover their positions, to get out of their positions, it would take about 4.5 days for all of those shorts to cover. And that's because there is a lot of short interest right now, and a lot of shares of the float are shorted, 38%. So for all all of those people to basically close their position, and this does take into effect the trading volume of C3.ai, is right now sitting only at about 9.3 million. So the trading volume isn't crazy high, and as trading volume will continue to decrease, this is what makes it harder for all the shorts to close their position in a timely manner if we see an explosion behind in this stock. And the reason why you get this basically short squeeze potential, and you see this in terms of a trading perspective, is because this is causing a buying pressure momentum from both the bears and the bulls. The bears are potentially losing an unlimited amount of the money because they're shorting the stock, and they're trying to get out of their position, which basically has them cover their position, buy back the shares that are shorted, and you have a bullish basically movement trying to trade off of that momentum. So with that being said, one thing to note here, Motley Fool comes out with an interesting article talking about the 2 overhyped artificial intelligence stocks to sell in 2024. C3.ai is number 1 on that list. So what you're seeing here is a lot of uncertainty and a big movement of bearish potential that's coming for C3.ai. And talking about that, despite its name, it remains a poor way to bet on the AI opportunity because of the relentless cash burn and lackluster growth. Now, talking about that, I haven't specifically done detailed analysis on their actual financials, but what we did see is a change in their guidance, and their overhead expenses do remain high, leading to an operating loss here of 79.4 million, up 10% from the prior year. So their operating loss is continuing to increase, and top of the line growth is really scaling and hurting into its profitability outlook. And the company doesn't look likely to scale into profitability anytime soon. And talking about that, C3.ai has a high valuation right now for what's actually being reported in terms of its revenue and earnings per share. Right now, it has a price to sales multiple of 12.6. So we can take all this data, put it all together, and what we're seeing is that basically there's a big bearish outlook on C3.ai right now, with uncertainty going ahead. Of course, talking about its operating loss, but we see with its outlook for any chance of profitability, and if there was any type of reversal with a high short interest, like I said right now at 38.2%, if we saw any bullish media outlooks come here, big changes for C3.ai, we see large changes in their earnings or anything like that, we could see a possible short squeeze. Of course, there's a lot of uncertainty, and all of the cards really have to be played right. So I think taking a bet just on a short squeeze is a 100% pure speculative play. So make sure you do full risk assessment and do your own research before basically taking a gamble. That's essentially what it is on a possible short squeeze. But it would be interesting to see. We'll see what happens. We'll keep you guys updated. Take care. Peace out. And I'll catch you guys later.